why so many traders got it wrong in the yen. Hi, it's Charlie giving you Saturday's video. I'm actually recording this on Thursday because Thursday's become such a rout here in the yen, or the dollar yen pair as I've got here. So first of all, what I'm going to do is take you out to a daily chart just to put it in perspective as to the size of this candle here. I'm recording this, like I say, on Thursday. So you will all be well aware that the Japanese central bank intervened in the currency markets to try to buy yen. So therefore, buying yen means the dollar yen will come down. So they intervened in the currency markets during the morning of Thursday, and so we sent this huge run. You know, the dollar yen was up at 146. It's been as low as let's call it 140, a bit over thus far. I'm recording this, as I keep saying, on Thursday. So what actually happens when this goes on? It all happened at 9 a.m. UK time. So it wasn't like it was during the night. It was, during the London session. So let's take this down to a 5-minute chart here. So this was the 9 a.m. bar, pretty much on the button there. So whoever was doing it was being prompt. The news didn't come out, obviously, for 10, 15, 20 minutes after the event. But this is what I've spoken to some brokers now. And unfortunately, what happens is your average retail trader gets excited by these sorts of moves. And don't get me wrong, I found it exciting today, but I'm not going and gambling on the moves that are going on. So what will happen is you're going to get retail traders who are going to see the early moves down. They're going to see this, wow, look at that move to the downside, and then naturally going to think, right, I better buy that. That's got really stretched here. So then they buy it, only for 10 minutes later it's gone down. But it's not going down. Bearing in mind what retail traders are doing. Your average retail trader has £1,000 in a trading account, and they might be trading on a pounds per point basis. So you've got £1,000 in a trading account, and they'll go and they don't use risk management. They'll think, oh, wonderful, I've got a trading opportunity to go and make a load of money here. Put £2 a point on, thinking it's going to go and have a bit of a run. It then just rolls off, and within a blink of an eye, it's gone from 144 to 143. That's a 5-minute candle here. It's done 100 points. 100 points at £2 a point, they've just lost £200. Maybe they're holding on to the position because they don't use stops. So then prices come down a bit further. Now they're thinking, oh God, what do I do? So they're now £300 down on their £1,000 account. Maybe it bounces here. It bounces a bit here. They think, oh, phew, and they come out of it somewhere up here, take a bit of a loss, only for then it to start coming down. So then as it comes down to maybe to here, they think, right, I'm going to sell it now. They start selling. They get into a bit of a profit. Maybe they sell some more, and then all of a sudden it comes up against them. This is the sort of stuff that's constantly going on in the markets. That the masses of at that end of the trading world. I am recording it, folks. At that end of, sorry, I'm talking to my traders in my trading room. They're watching me as I'm recording this. I use different software, guys, for doing the recordings for YouTube. So at that end of the market, when you're looking at your average person who's opened up an account with Plus 500 or eToro or that type of broker, they're gamblers, and so they're just going to see all this volatility and think, wow, I've got to get in on some of this. So either they're buying on the way down, so they're thinking it's going to go up, and they're getting caught here. Or you might actually also have traders who get the right idea, who might actually be selling. Of course, you're going to have people buying all the way down, but there's going to be traders who are selling as well. And someone right at this point down here must have sold. There's always buyers and sellers at every tick. And so someone was selling, or thousands of people would have no doubt been selling down here. And again, if they're not using stop losses, very quickly, their £1,000 going to be down at what, £600, £500? All of a sudden, they've just taken out 40-50% of their account in the space of less than an hour. And these are the sorts of things that trash those small accounts, because people gamble on those sorts of small accounts and don't trade properly because they don't use stop losses, they don't correctly work out their position size, so they only, if they're good, there's nothing wrong with trading. There's nothing wrong with having a trade idea and saying, right, I want to sell right down here. Nothing wrong with that, providing you've got a stop loss in, and if you do get stopped, you only lose a certain amount of your account, a small percentage of your account. So there's been all sorts of movements going on. And you imagine, as if we've gone in through this time, the psychology of someone who's now at this stage maybe had a fair few trades, had maybe some winners because they would have jumped in and then jumped out as well. So they've had some winners to compensate some of the losers, but they're generally down on the day. They've got the bit between their teeth. They're thinking, I've got to make my money back. And even if they bought down here, do you think they're going to hold all that way up? No, they'll probably jump out, then jump back in again, probably here, and then as soon as it comes back down a little bit, I better come out, and then they jump back out again. And they'll be coming in and out on every 5-minute candle or 1-minute candle. They'll be coming in and out because they don't have a trading plan. And then by the time it does come back down properly over here, they've had so many trades trying to second guess what the market's doing without a plan, that by the time it does come down, they're out. And by this stage, a lot of them, those who have been trading through all of this, have probably burnt themselves out, and they can't even make a decision to then come in at this stage anyway. So that's what typically goes on amongst the masses. What should go on is that you see what's going on as a trader. You've seen the announcement that the Bank of Japan have intervened in the currency markets, and you've then said, right, okay, if I want to sell this, I've got to accept that there could well be a bit of volatility here, so I'm going to sell this. I've got a plan of, okay, I'm going to have a stop loss somewhere higher up, and what's my risk to reward going to be? What am I going to be looking for? So if you're going to be trading it, then you look at it that way. You have an overall plan. You don't just think, wow, this is exciting, I've got to get in. And then once you're in the trade, start thinking about where you might exit, because it's way too late at that stage. Or even once you're in a trade, thinking about where you're going to put your stop loss, because again, you won't be able to make the decision. So by all means, trade on a day like today, but have a plan. And the thing is that most of those traders out there don't. And so if ever you want to see in visual context form a day where loads of retail traders are losing money, this is a great day because it's a highly volatile day here in the dollar yen and the other yen pairs. And volatility creates excitement in traders, and excitement is not good for the trading account balance. And so lots of retail traders would have lost a lot of money. Now, coming back out to this, I don't know, by the time you're watching this video on Saturday, I don't know where the dollar yen's going to end up. This is back to the daily chart now. So, but someone who strategically said, okay, they've intervened, yes, they have a vested interest in trying to keep this yen, the dollar yen supported, or the yen supported, should I say. They don't want to keep seeing the yen against the dollar the dollar yen going higher. So I'm going to sell this, and I'm going to have a stop loss up here, and I'm going to have a target down here, or whatever it might be. That's a plan. And so, but the masses, unfortunately, having had my conversations so far today, a lot of the masses who are trading on those smaller accounts. There's nothing wrong with trading on small accounts. It's just that a lot of people who trade on the smaller accounts tend to be in the markets to try and make a fast buck. And when you're trying to make a fast buck in the markets, that's when you're more likely going to lose several more bucks. So anyway, great example there today. Doesn't matter whether the dollar yen carries on coming lower, because a lot of those traders, when we come back to the 5-minute charts, they're up and down through all of this, trying to get in and out and second guess where the market's going without a plan. And those are the ones that are losing money. Anyway, hopefully that gives you a little bit of a overview of what may well have happened here today. It'd be interesting to see where this is by Friday. Take care for now, and I'll be seeing you next week.